Miles and MarthaLoss, your local real estate experts. We're starting to hear more about rate locks. And this isn't something you hear about when interest rates are good or interest rates are going down. You don't hear about rate locks. But when interest rates are starting to go up like they are now, you hear a lot about rate locks. And typically, rate locks are for 15 days, 30 days, 45 days, or 60 days. And what they do is, just like the name says, they lock you in at a specific interest rate. So let's say you go into a transaction, you put a property under contract, you're purchasing the property, rates are at 4.5%. You lock that rate for 30 days. So that means the rate goes up to 5.5%. You're locked in at 4.5%. You're good. Here's the tricky part is you need to make sure when you go under contract, you actually set up a calendar, a timeline, and you count out the days to make sure that your rate lock doesn't expire before closing. You actually want to take the rate lock through closing a couple of days past in case you need to extend your closing. So if your rate lock expires, there's a couple of things that can happen. One is if you want to extend it, before it expires, you have to pay a fee. And typically the sellers don't pay for this, especially in a seller's market. They're not going to pay that fee regardless. You're going to have to pay that fee. It'll be around 1/8 of a percentage point or 1/4 of a percentage point, depending upon how long you extend the rate for. But this is paid for cash at closing by you, and it's a percentage of the loan amount. That's what you pay. And if you don't do that, you have something called worst case scenario. So let's say 2 days before closing, your rate lock expires, you had 4.5%, and the prevailing rates, the current rates are 5.5%. You're going to float up the 5.5%, the worst case scenario. That's your new interest rate. As a result, your payment's going to go up, and you potentially could lose that property because you have a debt to income ratio, and your debt, your payment just went up. So this is something to keep in mind. Discuss this with your lender. Rate locks are definitely coming into play right now. You may want to have a longer rate lock going into a transaction, which would cost you a little bit at the beginning because you have a little bit higher interest rate to give you a longer rate lock, but it's worth it in the long run. If your rate lock expires the day of closing or right around there, it could be very stressful, so you want to carry it past closing. If you have any questions or need to buy or sell real estate, reach into the number below. Don't leave a comment and subscribe to my YouTube channel.